Today, Bitcoin takes a breather from the recent gains. Ripple's co-founder urges Bitcoin to shift to proof of stake. And Tezos co-founder Kathleen Breitman explains why regulators have to face the inevitability of crypto. Welcome to CNBC's Crypto World. I'm Kate Rooney. Cryptocurrencies continued to rise today, although with modest gains. Prices were up around 1/3% on average by 1 p.m. Eastern. Bitcoin was little changed, but held its ground above 47,000. Ether, meanwhile, managed a 1.6% gain. And one of the biggest winners today is Terra's Luna token. It hit a new record high of $107 earlier in the morning. Crypto World's Tanea McKeel has more on that rapid rise of Terra and the billions in Bitcoin that the firm backing Terra plans to buy.
Bitcoin today has pulled back just a little bit after a huge rally that saw it erase 2022's losses. A pullback like this and this modest feels a little bit natural, kind of like a pause after a big day of buying for investors. There's still a lot of really bullish sentiment in the market, as we know. 45K was a significant level to break, and now we're kind of waiting to see if Bitcoin can push through 50K. That's that key psychological level that many would expect to see bring a whole bunch of new institutional interest off the sidelines and into the market. We've talked so much about Wall Street moves in crypto. We're, of course, always monitoring the Federal Reserve and the developments in the war in Ukraine. One thing we haven't talked much about is the Terra Foundation, which is doing a lot to move Bitcoin's price lately, in addition to the things that I just mentioned. The Terra Foundation, that's behind the Luna token, and it is actively accumulating Bitcoin for its reserve for its stablecoin, which is called UST. So it's looking to create a $10 billion reserve, and it's been buying in batches. Terra has reportedly bought more than $1 billion in Bitcoin so far, just since January. And Luna today hit an all-time high earlier, and that was following its purchase of $135 million in Bitcoin only yesterday.
Now on to some of the headlines. First, the Biden administration thinks crypto could be a cash cow for the U.S. government. The administration's budget proposal sees crypto tax revenue totaling $11 billion by 2032, and $5 billion of that would be generated next year alone. It's part of Biden's call to modernize rules around crypto, which could include taxing crypto assets that rise in value even if they're not sold. Next, speaking of taxes, India just seized $11 million from crypto exchanges accused of tax evasion, and the country is naming names. The country's tax collection agency identified some of the biggest crypto exchanges in that country, including WazirX and CoinDCX as part of that seizure. India has stepped up its crackdown on crypto companies in recent months, including a 30% capital gains tax for crypto companies starting in April. Finally, Ripple co-founder Chris Larsen says Bitcoin needs to transition over to proof of stake or risk losing investors. Larsen joined Greenpeace in calling Bitcoin an outlier in its reliance on energy-intensive proof of work technology, and said the path the cryptocurrency is on is unsustainable. The likelihood that Bitcoin would transition to proof of stake technology, though, is highly unlikely. Lawmakers have also confronted the proof of work issue in recent weeks. New York State and the EU have even considered an outright ban on the consensus mechanism. Crypto World's Mackenzie Sigalo spoke to Tezos co-founder Kathleen Breitman about the growing scrutiny from lawmakers, and she asked her if crypto regulations for the industry need to catch up.
So Kathleen, let's start on the topic of regulation. Sources tell CNBC that UK crypto regulation is imminent. Meanwhile, the EU's landmark regulatory framework for crypto assets is jumping through the necessary legislative hoops as we speak. We saw Bitcoin surge following President Biden's executive order on crypto in early March, and I wonder, what is your take on how crypto markets will respond to new rules out of the EU? In this case, is more clarity a good thing, or is the hammer going to drop a lot harder than it has so far in the US?
Yeah, well, Mackenzie, candidly, I'm not an expert on regulation in the EU, but I think if I had to look at this as a shift, I've been following this industry for about 10 years. It used to be the case that people would talk about if crypto could do this and if crypto could do that. And now it's being treated as an inevitability, meaning, people are figuring out how to manage it, not if it will succeed or if it will thrive. So I think people are figuring out the best ways to learn to cope with the industry. I think it adds a lot of value to to people all across the world. And hopefully regulators will take a stance of trying to find ways to work with it and work with the technology rather than trying to outright ban it, which was always the boogeyman theory that would happen a few years ago. I think the posture is just entirely different now.
Now, we saw pretty aggressive comments at one point about limiting proof of work mining, which would have effectively banned Bitcoin across the EU. They quashed that proposal, and I realize that this wouldn't have affected Tezos since you use a proof of stake consensus mechanism. But what does it signify for the working relationship between the crypto industry more generally and EU politicians?
Yeah, I mean, I think it's good to have policy kind of direct, certain environmental measures. Certainly, we've seen, better consciousness in terms of public policy and corporate policy as a result of ESG funds, so on and so forth. But I think in the cryptocurrency space, it's kind of tempting to write off anything that's proof of stake friendly as something that's good for the whole network. Candidly, proof of work systems are kind of like the 1.0 version of the technology. I don't think that outright banning them is going to kind of mitigate that fact, but they do tend to have the lion's share of the attention because of their environmental impact. And the fear is that people are going to throw out the baby with the bathwater.
So Tezos was a first mover in the proof of stake consensus approach, which has become an increasingly popular concept since it's not as energy intensive as the alternative. Why did you go the proof of stake route from day one?
Yeah, so proof of stake has been the best in class consensus algorithm or approach since around 2014. In fact, the Ethereum Foundation advertised itself as moving imminently to proof of stake in 2014. It just hasn't wound up doing that yet. The Tezos position paper came out around the same time in 2014. And yeah, just looking at the survey of computer science research and what was going on then, it was just best in class. So why not implement what's best in class?
So as you mentioned, you founded Tezos back in 2014, just as the industry began to gain mainstream momentum. Now, at the time, it was more about all of crypto against mainstream finance, but it seems that the vibe has changed since then. For you, is it a multi-chain future or is it more of a winner-take-all scenario?
I think it's something in between. I think it's winner take most, right? So if you think about this as a different form of money, money thrives with strong network effects. It stands to reason that the best technology, eventually will hopefully, become the most dominant use of exchanging value online. I just think we're very far away from that right now. And so it's kind of like Highlander. We're all kind of traveling the same pack, but only one of us can survive. Hey, it makes sense to make friends along the way.
Do you see Tezos as a potential successor to Ethereum? Or do you think that you face competition with Cardano and Algorand, for instance?
I think Tezos is the best blockchain. I realize I'm incredibly biased, but if you look at the technical features that many of the names you just listed want to implement, Tezos more often than not already has them.
So let's talk about some of those use cases. What are the current or upcoming examples of Tezos in action that you're most excited about in the next 6 months, the next year?
Yeah, so I mean, in the next few days, the Tezos blockchain is going to have a self-amending upgrade, meaning basically that a supermajority of people who own the token have come together and voted on a proposal, which will basically have the blockchain instantiated upgrade on its own. So there's no coordination, there's no hard forking, there's no months and months of kind of exchanging with different miners. Everything is kind of done on the protocol with the use of people who own the token and a supermajority stake, instead of having a sort of benevolent dictator figure out when the upgrade is going to happen and try to coordinate with different miners across the world.
So you talked a minute ago about Tezos as a payment system on the internet. How would you explain to the layman the difference between a layer 2 Lightning network on top of Bitcoin's blockchain versus what you're doing with Tezos right now?
Yeah, so I mean, basically what Tezos, the core innovation that led to Tezos launching is basically that Bitcoin and most other cryptocurrencies lack a mechanism to upgrade themselves, meaning that, there's different technical solutions that have come to the fore due to research in computer science, economics, all these other things. And what's different about Tezos is instead of instantiating these new technologies as a hard fork or this massive coordination where you need to have everything shift to a new blockchain, what the Tezos protocol allows you to do is basically come to some forum and have people vote using their token stake on upgrades to the protocol, which are swapped automatically. So if you think about it, Google Chrome issues upgrades all the time. The person who signs the Google Chrome update is Google itself. With Tezos, the same thing happens, but instead of one party doing that, it's literally everyone or a supermajority of people who own the token.
Before we go, Mike Novogratz of Galaxy Digital joined Squawk Box this morning to give his take on those proposed taxes on unrealized gains. Take a listen.
It's just a crazy idea practically. I mean, I think of, stocks that I've owned from Fortress to Galaxy, have had wild volatility. I mean, there were times if, you declared my income at the end of the year and I had to pay 20% on that, I'd be bankrupt within 6 months because the stock fell so much. That it makes no sense. People don't have the difference between liquidity and paper wealth is at times gigantic. And so I think it's just practically, an impossible idea.
With that, you're all caught up. Crypto World will be back again tomorrow. We'll see you then.